Hi there, my name is Gina and I make videos all about real estate. So if you're new to my channel, don't forget to subscribe. Today I'll be making a video about credit scores and why they're important. Everyone knows that they should be keeping their credit score pretty high, but a lot of people are unsure why. So I'll be explaining that to you today. Pretty much your credit score comes into play when determining the interest rate on your mortgage. When you go to apply for a mortgage, there's two main things that determine what interest rate you're at, because not all people get the same interest rate at the same time. So even though as you might have seen in a previous video, which I'll link right over here, the interest rate might be really low, you might not be able to qualify for a low interest rate. So the two main things that go into determining your interest rate are your down payment, so the percentage of the home price that you're paying in cash, and your credit score. So your credit score has a really big effect on determining how much you're going to be paying in interest, so it's really important to keep it high. I'm going to give you guys a few quick tips that I have that I actually just learned recently about how to keep your credit score high. There's many ways that most people know about, but these are a few tips that a lot of people don't know about. One of these is that you shouldn't be spending more than 2/3 of your available credit. So this means that, for example, if you have $1,000 available to spend on a credit card, don't be spending all $1,000 on that every month. So even though you might be paying that off every month completely, it's better to be using less than like 660 of that available credit instead of using all of it, even though you'll be paying it back. So whether this means that you pay it off and then continue using that card, or you have multiple cards and multiple credit lines to use, those are better options. It's also beneficial to have multiple lines of credit and be paying small amounts on each one. So it's better to have like 3 credit cards and be paying 1/3 on each one, rather than spending all your money on one credit card. Banks like to see that you have at least 3 good sources of income and for at least 2 years each. So that way, when it comes to buying a home, the banks are confident that you've kept a good credit for a long time, and that will save you money on interest in the future. I hope you guys found these tips helpful. If you liked the video, give it a thumbs up. And if you have any questions about this, leave them in the comments below. If you're new to my channel, don't forget to subscribe, and I'll see you guys in the next video. Bye.